If I had to start over, this is exactly how I'd build wealth. If I had to start over today, no savings, no investments, no financial head start, just a normal income and the knowledge I have now, this is exactly how I would build wealth as fast as possible. And I'm not going to give you vague advice like work harder or just follow your passion, because wealth isn't built from motivation. Wealth is built from owning assets, assets that grow, assets that produce income, assets that compound over time. If I had to start over, I would follow a very specific 5-step system. First, I would focus on increasing my income as quickly as possible. This is where most people go wrong. They try to invest small amounts of money and expect life-changing results. But if you're investing $200 per month, building wealth will take decades. If you're investing $3,000 to $5,000 per month, things change dramatically. So I would focus on building a cash flow engine. Examples of businesses I would seriously consider today include a Sprinter van delivery business doing expedited freight or final mile delivery. You can buy a used Sprinter van for $15,000 and start making money immediately. A service business such as AI automation services, digital marketing, or virtual assistant staffing. These types of businesses can realistically generate $5,000 to $20,000 per month when run correctly. The goal isn't to get rich from the business itself. The goal is to create investment capital, because income fuels investing. Second, I would start investing immediately into the stock market through index funds. Two of the best ETFs to start with are Vanguard Total Stock Market ETF VTI and SPDR S&P 500 ETF SPY. These funds give you exposure to hundreds of the largest companies in the world. Companies like Apple, Microsoft, Nvidia, Amazon, and Google. Instead of trying to pick winners, you simply own the entire market. Historically, the stock market has returned about 10% per year over long periods. If someone invested $2,500 per month at that return, after 20 years, they would have roughly $1.9 million. My allocation would look something like this: 40% into VTI, 30% into SPY. This becomes the foundation of the portfolio. Third, I would add high-growth technology companies. Technology drives a large portion of global economic growth, and certain companies benefit massively from major trends like AI and cloud computing. Examples include Nvidia, a leader in artificial intelligence chips; Microsoft, dominant in cloud computing and enterprise software; Amazon, global logistics and cloud infrastructure; Taiwan Semiconductor Manufacturing Company, one of the most important chip manufacturers in the world. I would allocate about 20% of my investments toward these types of companies. If I were investing $4,000 per month, about $800 would go into growth stocks. Fourth, I would buy cash flow producing assets. One thing wealthy people understand is that income producing assets accelerate wealth building. Examples include dividend paying companies like Realty Income, ticker O. This company owns thousands of commercial properties and pays monthly dividends. Another example is Energy Transfer, ticker ET, an energy infrastructure company that transports oil and natural gas across the United States and distributes strong cash flow to investors. Dividend income can then be reinvested into more assets, creating a compounding cycle. Fifth, I would allocate a small portion of my portfolio to crypto infrastructure. Not meme coins, not hype tokens, but projects focused on real-world financial systems. Examples include Bitcoin, often viewed as digital gold; XRP, designed for global financial settlement and cross-border payments; HBAR, Hedera, enterprise-grade distributed ledger technology used by major organizations. I would limit crypto exposure to about 10% of my portfolio because of volatility. Finally, I would automate everything. Automatic deposits into my brokerage account, automatic ETF purchases, automatic reinvestment of dividends. Like this removes emotion from investing and turns wealth building into a system, and systems build wealth. If you study wealthy people, you'll notice something interesting. They don't just work for money. They own things that produce money, businesses, stocks, real estate, infrastructure. And when those assets start compounding, and wealth begins to accelerate. So if I had to start over today, this would be my strategy. Build an income engine, invest consistently into ETFs, add high growth technology companies, own cash flow producing assets, allocate a small portion to emerging financial infrastructure, and automate the entire system. Because wealth isn't built through luck, it's built through ownership and compounding. If you found this strategy helpful, then click subscribe because I will be releasing content daily to become wealthy.